you're a high-earning, successful IT sales professional, something changes and you find yourself in the midst of a career change. Not just any career change, because now you've gone 100% commission and you are a mortgage loan originator, and you build it into becoming a mega producer funding $125 million a year, with 58% of your business coming from home builders without the necessity of paying for that business. If you can fathom that, you can get to know today's special guest. Ladies and gentlemen, boys and girls, children 18 plus, you are tuned in to the Loan Officer Podcast with me, Dustin Owen, and a very special guest all the way from the DFW in Texas. She is a mega producer. She is a mom, a wife, a grandma. She runs a branch that is a family affair. Her business is currently experiencing its best 2 years ever during a down market. She is my new colleague. She is my new friend. She is the one, the only Patty Newby. Patty, welcome to Loan Officer Podcast.
Thank you very much. Appreciate you having me.
Yeah, I'm super excited. I loved getting to know you when the cameras are off, but now I'm going to love letting the audience get to know you because you have an amazing story. Whether you are a realtor, a financial advisor, a life insurance salesperson, an entrepreneur, or you're a mortgage loan originator, there's a lot to be learned by your story. So I know a lot of our audience that tunes in, they are in the mortgage industry. 30% currently are not. But regardless of where you are, if you are in business, in sales, or an entrepreneur, you're going to want to learn Patty's story because this is incredible. You are a high earner working for a Fortune 500 company, making six figures.
Yep.
And after 20 years, abruptly stopped doing that career.
Yep.
And had to basically start over.
Yep.
And that was what, 2004?
Yes. At end of 2003, but yeah, that's when I got my license, 2004.
So 2004, you become a mortgage loan originator. So like most of us, you didn't go to school for this.
Nope.
Right? You went to school?
Yeah.
Yep.
My background was in accounting.
In accounting. So your degree's in accounting.
Yep.
Worked in IT sales.
Yes.
For about 20 years. And how did you find mortgage, or how did mortgage find you? Completely
an accident. So I found myself trying to figure out what to do for my second career. And I went to a party, one of those parties where a bunch of women gather and all sorts of fun stuff. And I had the bright idea to make gift baskets for realtors.
Like this was your side hustle?
Yeah. Just till I figured out what I want to do.
Okay.
And so I started making gift baskets. I started taking lunch into realtors, and they started buying gift baskets, 5 here, 20 there. And I'm like, what am I doing with my next career? I didn't know.
Well, out of curiosity, like I think about the gift basket business, like from a scalability standpoint, how many baskets would you have to sell to actually replace your income from the IT world?
Way too many.
Way too many.
And putting them together and all that, I'm like, okay, that was good for 4 or 5 weeks.
Okay. Yeah, it'd almost be like, my wife at one time sold 31 bags. And I know there are plenty of people who make a career out of it, but there's not that many. I would put probably gift baskets on a very similar, fun hobby / side hustle, but probably not a way that I can replace what my old career gave me. So did you seek out mortgage, or did mortgage seek you out?
Yeah. So a friend in a previous industry, he said, why don't you come be a loan officer? Have you ever thought of that? And I'm like, no. And he said, I'll teach you and come on over. And so I'm like, my background is in accounting, and I'm like, why not?
Okay.
Right? See where this takes me. And he was gracious enough to train me up. It was a little small broker shop. And what a blessing it was.
So you found someone who was willing to take you under your wing.
Correct.
So it happened to be a small broker shop, but it probably didn't matter if it was a credit union, a bank, and a large national IMB, or a broker shop. Did you find it was most important that there was another human that was willing to invest in you?
Yeah, and the owner of the company was willing to invest in me too. So when I remember our first client, he showed me how to present the disclosures to a client, and he always brought them in, and it was 3 hours. 3 hours, but he went through every paragraph on every page. So I learned a lot. Now, I was trying to figure out a way to not make it 3 hours.
Yeah.
But it was a blessing that they were willing to take their time and teach me.
So this was what, 2004-ish,
Yep.
right? So 2004, 2005. What was that first year for you like, and where did you find your initial business?
Yeah, that's interesting. I had only been in DFW for like 5 years.
So
it's not-
you weren't from the Dallas-Fort Worth area?
No, from Indiana.
From Indiana?
From Indianapolis. So a couple things. So I was trying to figure out what to do, and a friend of mine who happened to be a realtor, she said, "Come with me to this event." Well, I didn't have anything else to do, so why not? And I was listening to the person, and he was just saying all sorts of wise things that just made sense to me. And in the very last day, he's like, "Do you know how to run a business?" And I'm like, "What? I'm going to be a loan officer. What does that have to do with running a business?" And so I'm like, "No, I have no clue," because I came off the W-2 role and I was 1099 back then. So I signed up for coaching.
Okay. Who's that with?
Brian Buffini.
Brian Buffini, who probably still crushes it
Yeah.
more in the real estate space, but he offered obviously same coaching principles to mortgage loan originators as well.
And you're sitting there as a loan officer with a bunch of realtors. That's not a bad thing either, right?
Okay. Yeah. Very strategic.
But very brilliant ideas that were simple. They weren't gimmicky and they made sense to me. But my coach, I went all in, one-on-one coaching. And
Was this your first year?
yeah, this was like my first week.
Wow. Like you take
I
on
knew
this,
nothing.
you take on this 100% commission role.
Yep.
Then you go home and you tell your husband, "Oh, hey honey, by the way, I'm getting ready to spend thousands of dollars."
$5,000.
Wait, in 2004, coaching was $5,000.
Yep.
For anyone who is like, "Oh, I can't afford the TLOP coaching that we offer."
Yeah.
Ours is $3,000 for the entire year. I think it's actually $2,500. And this is like in 2024 dollars. Okay, so you're dropping $5,000 1 week into your career because you're like, "Look, if I'm going to do this, I'm
doing
going to
it."
go all in."
Yeah.
Okay, and in the program you chose was Brian Buffini.
Right.
And you essentially, I'm assuming you mastered the Buffini system, the pop buys and the handwritten thank you notes, and whatever your coach told you to do, you're probably a coach's player.
Yeah, they match you up personality-wise after you take this test to get your personality. And so I had a very tough military coach that said, "You're going to do this." And I'm like, "Yes, ma'am." But I could copy and follow, and she told me what to do, and I just did it.
Because there's no secrets.
No.
Right? There's no secrets. There is no like lightning in a bottle. Only this person has it.
There's passion and grit.
Okay. So what did you end up, better yet, how long did it take you to replace your income?
So a couple things. Back then, the broker that I was with would get a list, and we would literally fold envelopes, stick an envelope, like a stamp, lick the envelope. So I was doing that, and that was about a 25% close ratio. And
Wait,
then,
you were just like basically like snail mailing.
Oh, yeah.
Like cold calling, but snail mailing
first
the
postal.
consumer.
Yeah,
The
it was
consumer.
terrible.
Okay.
And then he also gave me some advice that he said, "Go take the hardest mortgage product that there is and master it." And I did. And I got all the leads for that little shop. I had generated most of them, but that was really wise because if I could do the hardest, most complex one and set myself apart from most other LOs, then I had a little niche. And so I went and joined the
You know what? Watch this. This is a great place for us to take a quick break.
Okay.
Okay, because this is like a little bit of a cliffhanger because I'm getting ready to ask you, what was the product?
Okay.
What did you do with the product? Because I think you're getting ready to tell us this was like a catalyst or a turning point.
It was.
So I'm not going to let you off the hook. I do want to know how long it took you to replace.
I'll tell you.
Okay, you'll tell me that. It probably coincides with the
Yep.
other story. But I do need to give a shout out to our sponsors. You and I are colleagues. We both work for Lower. We are here in Columbus, Ohio. We are at Lower's annual sales rally at the actual lower.com field. Right, which is pretty cool, right?
It's very
like,
cool.
you know, we're at this Major League Soccer stadium, and it has our company on it, Lower.com. Well, Lower is our company, but Lower.com is the website. But Open Door is a sponsor of our event. You know, there's Radian's a sponsor, Enact is a sponsor, Birchwood, our credit vendor, is a sponsor. So shout out to all of our sponsors. But I want to give special kudos to Open Door. And I recorded a special message for all of our loan officer friends about why and how we should be working with and not against our friends over at Open Door. Check this out.
Loan officers, if you're anything like me, you've probably never even thought to partner with Open Door. Well, I'm here to tell you, rethink that thought process. Here's why. How many times have you had a buyer or a borrower wanting to purchase that next home, but they couldn't get an offer accepted because they had to sell their home first and no sellers were willing to accept an offer with a contingency? Open Door has a solution and they're willing to work with your realtor partners. And Open Door is perfect for buyers wanting simplicity and convenience. As long as the home is not already listed in the MLS, they will pay your referring agent a 1% commission when they buy your borrower's home. Open Door's been around for over 10 years and they operate in 50 different markets. So do yourself a favor, do your referral sources a favor, and look to Open Door the next time you have a borrower who needs to get a home sold quickly and conveniently and can't mess with the stress of listing the home for sale in the MLS.
All right, so the income and how you got to the income. So your advice was, I'm going to find the hardest loan.
Yep.
And what was that loan?
Construction lending.
Construction lending. So a construction loan, which is different than an in loan.
Yep.
And we've done actually several episodes. Shout out to Eric Putt and to Joe Manglardi, who both talked one renovation, one talked construction, who helped us make content on that. And you can go to the YouTube channel and consume it if you want to learn more about construction lending, or just go work for Patty and she'll teach you everything she knows. But you learned construction lending, and then what did you do with that product?
I joined the Dallas Home Builders Association, HBA.
Okay.
And I attended every luncheon. I got to know builders. I would pop by builders on a Saturday or Sunday when they were there, when their home was done, and I'd take them a cupcake, or I would sit there with a folding chair in there and chat with them about who we were, what we could do for their clients, and then start to chat with clients.
So you were a small broker shop. You were not working for a top 25 or a top 5 lender.
Yep.
It was 8 of y'all, but you took the time to learn this product.
Correct.
And then you're bringing this product to builders because you're like, look, this can help builders build more homes. Right. If builders build more homes, they make more money.
They're not carrying the risk.
Yes. If they're making more money, they like you.
Right.
Yeah. And you're de-risking it because a builder can either use their own money to build a house, or they can use OPM, right? Other people's money.
Right.
And you gave them an opportunity to build other people's money.
Correct.
So with that product and with this new marketing strategy, I'm assuming things took off pretty quickly for you?
It did. It took me about 2 or 3 months where I was not making a lot of money. And then I started hitting 5-digit a month checks. And my broker, he said, well, you've done that once. It's not there till it's a pattern. And I did it month 2. Month 3, and I made 6 figures my first year.
Your first 12 months in the industry, this was 2004-ish, 2004, and someone had told you, well, you can't do this. You're like, oh, hold my beer.
Yeah. Yes, my coach
hold
said
my
I
Zima.
could.
Hold
my
my
coach
Zima.
Said, he told me I couldn't do it.
What, your coach?
Yeah, my Buffini coach said, you can do it.
Oh, you're okay. Your coach said you could.
Yeah.
Yeah, your
my
coach.
owner said I could not.
Okay.
He'd been in the business forever.
Oh, man.
Because loan officers don't do that.
I so love that. So I'm assuming you spent the next 2 or 3 years just really honing your craft.
Yep. And then expanding and working with other realtors and trying to, reach my connection.
Yeah, because you obviously, like me, we lived through the crash. And those of us that lived through the crash, I would probably never give up that. I think it helped make me who I am. I'm sure you'd probably agree. It helped make you who you are. But like, what type of units and volume were you doing leading up to the crash? So this was 06, 07.
Yeah,
like,
I don't remember.
Okay.
I mean, I was in that 6 figures, low 6 figures.
Okay. So you're consistently making $120, $150 a year.
Something like that.
You're funding 60, 80 loans a year. Although, you know, back then.
That was a lot.
Oh, yeah. I made 55 basis points in 2006.
Yeah.
And it wasn't because I was in an MSA or I was like working internet leads. No, these were self-sourced. That's how the industry operated. So like I funded, I want to say like 114 transactions for 26 million. And I was thrilled that I made $140,000 that year.
Right.
You know, like this was 2006. I thought I was hot shit.
Yeah.
Nowadays, nobody would work for probably less than 100 basis points in most markets, unless you work for a credit union, and that's a different setup,
Right.
or you work consumer direct, and again, different setup. But for those of us that are purchase focused, it's our own book of business, we're
Right.
self-sourcing, we probably all want to earn net at least 100, if
Yeah.
not 150 basis points, depending on your market. What did '08 teach you? Like, I know what it taught me, but
Yeah.
but what did you do during that '08, '09 time frame, and how did it shape you into like the originator and the branch manager you are today?
Yeah, so it gets serious pretty fast. So mortgages just stopped. Like, you had a nice book of business and loans in the pipeline, and then I'm like, where did they all go? Like, overnight. And so when I was trying to figure out what to do, we were so concentrated in DFW, and there's a lot of competition. We decided to go up and decided to go down. So we'd work $1.5 million, and I closed loans for $50,000. And we took care of DFW, my little market, realtor group. And then I went outside, like 2 hours away.
Were you driving that?
Yeah.
So you'd get in your car and you did
Yep.
old school, old fashioned
Yep.
sales. I don't think enough mortgage originators do that. Like my friends over at Flat Branch Home Loans, and shout out to Flat Branch. I love the Flat Branchers, but they are in more rural states, right? The Oklahoma, the Missouri, Southern Illinois, and they have road warriors. They have men and women that will drive 2 hours a day like it's nobody's business, but they're also funding 20, 30 units a month, right? So you in 2008 recognized that, look, business is scarce.
Right.
I need to start
Pivot.
expanding outside. I need to start going in some areas that are more affluent and
Yeah.
chasing bigger loans.
Right.
But then I need to go in other areas where there's less competition, which may mean putting miles on your car.
Right.
Wow. And it worked.
Absolutely. And I think one of the things that I always do is just try to keep an open mind so that our industry, because it's so connected to the financial industry and what's going on in the world, you've got to be able to pivot on a dime. So I didn't have deep enough or wide enough strategies to sustain things when '08 happened. So I know I had a little bump in my income. I don't remember what it was, but we recovered pretty quickly because of that. And working by referral, I was still in the Buffini system. It really taught you to care for your clients, which I hate the word CRM or database. I hate those words. But the past clients, and those clients would refer us to another client. I remember I was working with a nurse in a hospital in DFW, and she called me at night, and she's like, "We're talking about you." I said, "Well, keep talking." And I think she referred me to like 15 other nurses.
It's interesting because I don't think enough people, especially the newer people, right? The next gen originator,
Yeah.
which, man, at this point, you and I think what we're looking to do at the back half of our career is to support
Yep.
the next generation.
Correct.
Right? We were supported by people who brought us into the industry. It's our turn to pay it back,
Yep.
and in many cases pay it forward. So let us take this opportunity. Brian Buffini did an amazing job, and probably still does, of making sure that sales professionals, whether they're realtor or lender, turn one transaction into three.
Yeah.
Right? Like that was like, he was a by referral only disciple. So he taught marketing strategies that still would work today.
Yeah.
And that's what you did so well, which allowed you to take your foot in the door, learn that hard product, got in front of builders. Builders referred you to people looking to buy new construction. And then from there, you leveraged those people to refer you
Correct.
to their friends and family. And not all of their friends and family, I'm guessing, bought new construction or wanted to
Yeah.
build a home. So now you're getting introduced to realtors.
Yeah, and I also went back to the realtor office where I had done the baskets.
Okay.
And I got someone else to do the baskets. And then I started, presenting what we could do, mortgage solutions and things like that.
Did you ever offer baskets as like a service of, well, if you partner with me, then, every closing we do together, my team will create this basket and we'll include you as a part of it? Or
I found someone to do the baskets. I'm like, here, you
you're
just
like,
take
I'm done.
It was a blessing for
Yeah.
60 days or whatever, a couple of weeks, to figure out where my path was. But no, I was done with the baskets.
Yeah. So so this year you're going to fund 125 million. Like, and that's you and your,
and that's my team.
that's your team. So what does your team consist of?
We have 3 new LOs,
Okay.
brand new. Like
Okay.
2 are new in the industry.
But do they work for the Patty Newby team, or are they out building their own books of business and you're just coaching
Both.
them and mentoring them? Oh, both.
Both.
Okay.
So the way it was all under me as a
Okay.
producing branch manager.
So your NMLS, like when
Yeah.
I go into Big Purple Dot or MMI or Redder, I'm
Yeah.
seeing that production volume under your name.
Yeah, and I think I've only done, we're going to have a big month this month, but I think I've only done like about 80 million this year to 90 million, but we should fund a lot of money, in April,
Yeah.
October. But 19 of that million out of the 125, so, let's say 20 million, has come from my other LOs.
Okay.
So,
But they're working your accounts.
No.
No.
So,
Okay.
So what we did is, it's really important for my team that I understand what their career goals are and their income goals. So like my assistant branch manager, shout out to Zach.
Yeah, who by the way, also her son-in-law.
Right.
And
But
your
he is-
husband works for the team.
Yeah.
And your daughter works for the
She's
team.
marketing,
Yeah,
yep.
it's a family affair. I love this.
But he is unstoppable.
Okay.
So he has found his own builder account in another state, and we got that lead from a financial advisor. That led us to another state with 2 realtor groups and a second builder. That's all rolling up with him.
Okay.
And as we have recruited other LOs, they have niches in other states. So we're in about 8 states now.
Wow.
So
you're just getting started.
yeah.
Like there's no plateau here. This is you have turned a corner.
Yeah.
And because we haven't talked about this on camera, but off camera you shared with me that like 2020 and 2021 were not your PRs. They were not your personal records. 23 was your personal record, and now you're going to crush your 23 with 24. Yeah. So you, when everyone else is down, you're like, nah, dog, I'm up. Like,
you know what though, when the industry gets tough, if you just double down on everything you've been doing, you're going to have success. And that's all we did when it got tough. So we went back to the basics, and all we did is double what we were doing.
what has working with builders taught you? Or like if you were trying to coach one
Yeah.
of your younger originators, and by younger, I never mean age. Younger to me is how many years you've been in the business for.
Yeah.
Right. But one of your younger originators who wants to follow in your footsteps, like what are some do's or don'ts or like 3 best practices for working with builders?
So, okay, with builders. So,
Yeah, because you're unique.
Fine.
58% of your business. You're talking 70 million of your 125 million is going to come from builders. Like,
Yeah.
I did loans for 16 years and I was doing 12, 15 units a month. 0 was builder. I would have loved to have 5 units a month coming from a builder. And I
Yeah.
just never figured out that particular referral silo.
well, there's 2 portions of it. There's the production builder, right? And then there is the custom builder that you have to, it's a whole different set of language. So that was a passion of mine. And first of all, you have to understand what the builder needs, right? So builders, it's very difficult. Like when they run out of tile and they got to go get another box, or they need that loan, that draw funded, they don't really care if you're on vacation or whatever. They need the process, the behind the scenes work to go smoothly. So for my custom builders, I would always go out and check with my builder and understand what their product was, and then help them figure out how to market it.
Okay.
Because they're builders, maybe they're not the best marketers, and we would have realtor groups in their house showing off their house. And do you need me to sit in an open house on a Sunday because you want to take the day off for your family? So I would do stuff like that. So, and when you do that, builders are multiple. So it's not that you're just working with them for one home. I have a builder right now outside of DFW, and we've worked together for 8 years.
Wow. And this is a construction builder. I
And
mean, a custom builder,
Yeah.
meaning they need a construction loan. They're not doing in loans like the Lennars and the KB Homes
Yeah.
of the world.
Custom.
They're track builders, and we
Right.
need in loans for them.
Yeah.
But you're working right now. These are custom
Yep.
builders.
And we've got some that are $1.5 million, $1.8 million, $2 million. But go out and find those builders, even those builders that build 20 to 50 to 70 homes a year, that they need support. What can you, as a mortgage advisor, offer them? And that opened a lot of doors.
Yeah, and sometimes if you want to know what they need, ask them. Like it's that simple.
Yeah.
Get the meeting and ask them. Like, hey, how can a lender like me bring you more value?
Yeah.
And then based on their response and based on what you know your strengths are, then you try to fill in the gaps.
Right.
Approximately how much of your business is coming from actual, what I would call an in loan, a track builder, someone who's building enough homes that they don't need your money, or really, I guess it's our money if we work for the same mortgage company.
Yep.
They don't need our money to build the home.
Correct.
But they do need, the buyer needs our money to purchase the home from the builder once the home is fully built.
So out of my 58%, we do about 10 to 15 million in construction loans, and the rest is a production builder.
Okay.
And
how many of these production builders have been with you for 15 years versus been with you for 15 months?
8.5 years, 7 years on another, 3 years for one other.
Okay.
So
And
it's different.
they just want good service.
They want good service. And you know what? At the end of the day, what does a builder care about? Help me sell my home.
Okay.
What are you going to do to help me sell my home? If you can answer that, both in a product and a marketing way, you'll earn their trust.
Yeah.
And it takes a while. We're not just going to say, ooh, this is so-and-so. Just here, I've been just waiting for you to walk through the door. No, that doesn't happen.
So I'm going to pivot a little bit because I saw you on stage earlier this morning and you were on a top producer panel, and thank you for that, for spending that time. And I loved where you went with a particular question as it pertains to technology, right? Because so much of why I left a company after 16 years to join Lower was because I want to be with a place that focuses on the 2030s and not the 2010s.
Right.
And 2030s is about technology. It really is. And it's what we do in the 2025 to get us to 2030. What are you and your team doing right now to leverage technology to separate yourself from the competition?
Yeah, our tech stack is pretty big, but I'll walk you through in order. First of all, Dave Savage with the Mortgage Coach.
Shout out to Dave Savage at Mortgage Coach.
Seriously,
yes.
y'all. But we've been using that for about 8 years, and I will share probably about 5 or 6 years ago, we had the client's business. She was buying a house, and then she started asking us about the lock. And I'm like, it was one time. I didn't do a TCA, total cost analysis. And I'm like, okay, just follow your own advice. For those lenders that don't use it, you need to run and not walk and get signed up with Dave. I don't get a penny for saying that. I'm just telling you, it is the best way to take rate and emotion out of it. And you can plan and give a factual financial plan to a client, not only for today, but to help them save money and grow their net worth. Very powerful.
Yeah, and based on experience, you have to use it on every client.
Every client.
And you have to do 30 or 40 of them before you say this is not for me, because it's a new way of thinking. It's a new way of processing information. You'll be clumsy at first, but I promise you the data, right? Men and women lie. The data doesn't lie.
Right.
The data says you will have less pricing exceptions and you will increase your conversion ratio. So, okay. So up front, you're like, we are all in on Mortgage Coach.
Yep.
So that's part of your tech stack. What else is a part of your tech stack?
The next thing in order, about 4 years ago, I think it was on a Dave Savage call, podcast or whatever, not even the podcast listening, but somebody said something and I'm like, what the heck is that? And I Googled it. And so I had an opportunity to meet Scott Nicholson, not in person, but on the phone. And he has a program called Lender Marketing Platform.
It's awesome, by the way. It's awesome because
it's stupid, silly, awesome.
It is stupid, silly, awesome. I had a coaching student. Shout out to Kayla. She just moved over to Guild Mortgage. She's in California. So hopefully she's working with our girl Shayla if she's, in California and at Guild. But Kayla sent me like an email. And I was like, that is fancy AF, which by the way stands for always and forever. If you don't think it stands for something different, then you know what? You take your dirty mind that way. But she sent it to me and I'm like,
oh yeah.
That is, and I said, where'd you get that from? Next thing you know, I was on a call with Scott.
Oh, yeah.
And I'm still trying to figure out a way. And Scott and I we were hanging out in Vegas a few months ago. I would love for like all of the TLOP MLO coaching community members to have access to his product. So, okay, nonetheless, sorry for my rabbit hole. Keep talking about it. And by the way, I don't even know Scott that well. And he sure as hell doesn't pay me to say that. But
nor me.
Okay, nor you.
Nor me.
But what do you use his product for?
So we take all of our YouTube videos, flyers, looms, whatever we want to share with the client, and we put it all into one platform with the TCA. So for all of our clients, we started slow because lender marketing platform can just blow your mind if you just got to start slow. So we started it with our presentations and we wrapped all our tech in there. So the client was looking at our videos, getting factual information, and it had a counter on it. And I'm like, well, this person's been on 10 times, 8 times, 20 times, 40 times. So people want access to information at 2 in the morning or whatever is their schedule. I'm not going to answer the phone at that time, but it proved out that they were using it. Now, we do a lot more for that. We wrap in our agents. It's a mind-blowing what it can do. But
are you using it for newsletters?
That's my next step.
Okay. So I've seen it used for newsletters and my mind was blown.
That's where I'm going.
Okay. So what else is part of your tech stack?
We also use FinLocker. We adapt.
Shout out to Brian View. He is a huge, huge supporter of the show. We're a big supporter of FinLocker. Brian and I are friends. That's so awesome. So what are you using FinLocker for?
Well, we use it in 2 ways. Sometimes a client needs a little credit TLC. They're 400 or 500 credit score, and you're just not going to be able to get them there. So FinLocker, we send them a link. We can watch as their score goes up. They can get in and play with it. All those like what if scenarios that we used to do. It's a retail algorithm, but it keeps the client engaged with you and it doesn't cost them anything, and we're getting that data. The other thing we're doing for it is post-closing. So all of our clients that, okay, maybe you're a 640 credit score, but eventually we want to refinance you off of FHA and put you on a conventional, or how do you get rid of your MI or any of that? And consumers, look at all the apps that are out there that they're paying for it, $30, $40 a month. This way they don't pay for it, and they have access to the information. And that's one more thing that we're offering them post-closing.
Wow. Is there one more thing, or is that your 3 go-tos?
Well,
we
do a lot more, but
we don't have all day for that.
Those are my top 3.
And we don't need to give away all of Patty's secrets. Well, let's do this. So we have to find a way to like put a bow on this. I'm actually due on the main stage here like in 15 minutes anyhow. So I can't be too long. They have to mic me up still. But I do want to know, what does the future look like for the Patty Newby team? Where are you looking to go with this, and what excites you about the future?
So I'm looking to grow my loan officer's income. So we're getting in front of more agents, and I'm helping them with sales strategies and rolling our tech into that. I think in this next generation, if you don't embrace a lot of tech, when the consumer wants to see it, that's not good. But you also have to embrace picking up the phone and being there with loving and compassion for the client. Mortgages are actually very easy. You have a product, you get some paperwork, you give the clients the keys. It's what the secret is effective communication.
Okay.
You know, and so that's what we're always making little strides to do. But I think you have to high touch, high tech, and be very open-minded to pivot and go in any direction that the market takes us. Because we don't know where all AI is going to go, right?
We don't. And I'm a firm believer that people do business with people, right?
Yep.
People do business with people, not with companies.
Right.
And not with tech. But they're going to expect me, the person, to have the best tech.
Yeah.
And that tech is going to work in conjunction to me, the human. Here's a second to final question, right? My final question is, how do people get a hold of you?
Okay.
But my second to final is going to be, go back 20 years, talk to that younger version of yourself. What are you going to tell her today now that you have 20 years under your belt? So
be blessed. It is an amazing industry. I wish I would have done it in my 20s. And just have fun. Be real. Don't step on a gray line. And when a client has a question, pick up the phone. People say, oh, you answered the phone. Well, of course, you're my client, right? And it's just been a blessing to be in this industry. It's so much fun when you get a call from a client or a text and they say, it's our first Christmas or our first holiday, you know, I just got the nursery done, or whatever it is, whether it's reverse mortgage. And I helped a client. He is a beautiful story. And he said, I went and I bought 3 pairs of pants because of a reverse mortgage. I mean, I started crying.
Oh,
you know,
because he couldn't afford those 3 pants prior to you stepping in and offering a financial solution,
right?
Leveraging his home's equity to allow him to live a healthier, financially healthier life.
And he spent $100, but he was only on Social Security.
Yeah. Oh, I do love stories like those. I think those are like, it's kind of like good golf shots. That's what keeps us coming back. So how about this? If people want to get a hold of you, right?
Yep.
What are your handles? How do I contact you? Are you on LinkedIn? Are you on Facebook? Do you have a website?
Oh, yeah.
Hook us up. If someone wants to connect with Patty Newby to learn how to be more like you, or to learn how to be a part of what you're doing, how would they do so?
will always come and join us at Lower or the Loan Designer. So you can always Google the Loan Designer or Patty Newby. Our number's 972-534-5626. And where do you start? You start at the Loan Designer. That's our email address.
At the Loan Designer.
Yep. Start at.
Oh, start
at
the
Loan
Designer.com. Wow. That is
we,
so awesome.
And we put a trademark on it because we really design the loans to save clients money.
Yeah. Well, Patty, thank you so much for taking the time out of your super busy day to hang out with me, but more importantly, to hang out with the audience. To the audience, if you're tuned in on Spotify and Apple, first, I say thank you. Second, please give us a 5-star review and be sure to share this content because sharing is caring. Please know if you don't want to just listen to us, you can watch us by going to our YouTube channel and you can subscribe. Every single week I write, that's right, I write, not AI, I write a newsletter. It's free. It's pretty awesome. It's easy to read. And you can sign up for that at tloponline.com. And while you're at tloponline.com or TLOP Online, that's where you can find out about joining our coaching community. She's Patty Newby. I'm Dustin Owen. That is all the time we have for you today, but we do look forward to catching you on the next episode. Peace.